and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari, and with me in the studio is my friend and colleague Amit Ranjan. Now, we have got lots to talk about this Thursday morning. You know, the December quarter earnings season is finally here, and we have the big IT heavyweights, TCS and Infosys, that will come out with their Q3 numbers, after the market hours. We also have Mr. Santosh Meena, head of Swastika InvestSmart, joining us, and Rohit Srivastav, who will also join us later in the show. But before we get into all that, let's look at the global markets. And the setup, Amit, is looking rather constructive, isn't it?
US is in the green. JP Morgan Asset has opined that the Fed rate cut may be much steeper than people are expecting. So it is a cut. It is not just going to be a status quo. That's what they are expecting. Investors are awaiting the December consumer and producer inflation data that is due on Thursday and Friday, which will basically give a direction of which way the monetary policy of the Fed is going to go. Dow Jones closed in the positive at 0.45%. Nasdaq was in the positive at 0.75%. S&P Standard & Poor 500 closed in the positive at 0.57%. European markets were still in the red marginally. The Stoxx 600 closed at 0.18% in the negative. After the People's Bank of China readjusted the yuan with the dollar, it has given a big boost to the markets in Asia, primarily Hang Seng. So the HSI has been up today by more than 1%, 1.41% this morning. And Nikkei, we said, touched a 34-year high yesterday, is still in the positive at 2.00%.
All right, and even among other cues that we have been tracking, the dollar index and the bond yields, they haven't moved much. The dollar index is still hovering around the 102.5 sort of levels, whereas the yields are still holding above that 4% mark. The big mover overnight perhaps was the oil. Brent crude, as we speak, is down by about 1% or so, and now it has fallen below the $77 a barrel. Back home, Indian markets have also witnessed a very strong start to the session. Nifty opened just about 12 points shy of the 21,700 mark. We have managed to, recoup, in fact, move above those levels. Nifty, as we speak, is above 21,700 mark. Sensex is also slowly inching towards the 72,000 mark. The broader markets, they are also trading with gains of about 0.5% or so. Nifty Midcap 100 has reclaimed 47,000 mark. In fact, it's closing in on 47,400. The small cap index is, slowly inching towards that 15,500 mark. And, the all-time high for the index, it's just above the 15,500 mark. So perhaps we could be testing that as the session goes by. India VIX, now that has fallen below the 13 levels, and this is after a very long time. In fact, after over a month, the last time we saw levels below 13 was back in December 4th or 6th. So India VIX is also trading with a cut of about 0.09% this morning. But with that, let's also bring on board Mr. Santosh Meena, Head of Research at Swastika InvestSmart. Santosh, thank you for joining us here on News 9. Appreciate your time, appreciate your thoughts. And a very happy new year to you. I think we are speaking for the very first time since the beginning of the year, but not a very healthy start for the markets. We have seen some wild swings on either side, and the market has been rather directionless, but broadly consolidating in a 300-point range on Nifty from about 21,450 to 21,750. What's your overall sense of the markets? Where are we heading?
Yes, first of all, good morning and happy new year to you and your entire viewers. So yes, January is known for this kind of volatility. Historically, November and December month remain strong month, and then we see some kind of profit booking and sectoral rotation in the month of January. So same pattern is followed in this month. So I think, but good part is that despite worry of growth in mid cap and the small cap space, and we were expecting some major profit booking can be seen in month of January, but there are no signs of weakness in the market. We are just consolidating, and yesterday there was a smart rebound from the 20-day moving average in Nifty, because 21,550, 450 was the area where 20-day moving average was light. So we saw a smart recovery from there. And today Nifty managed to cross 10-day moving average of 21,650. On immediate basis, 21,750, 770 is a resistance area. Once it will be crossed, I believe we can expect a move towards 22,000, 22,200. So for timing, we are in a sideways mode. But after this event of earnings of Infosys and TCS and the overnight data of US inflation number, we may get direction from here. And higher probability is there that we may see upward movement towards 22,000, 22,200. So the texture is buy on dip until we manage to trade about 20-day moving average, which is currently placed around 21,500. If I talk about Bank Nifty was underperforming, but yesterday it bounced back from 47,000 support level. On immediate basis, 47,700, 48,000 is a resistance area. Once it will cross 48,000 mark, we can expect a short covering rally. Some important heavyweights names like Reliance, ICICI Bank, SBI, even HDFC Bank, Kotak Bank are trading near important support level, and Reliance managed to break out previous all-time high resistance. So I believe some heavyweights will participate in this rally to support the market to move towards 22,000 mark.
All right, and what's your sense of the broader markets, the mid cap and the small cap? The rally seems to, seems not to be stopping anytime soon. You know, even this morning we are up 0.5% on both indices. Both indices are in fact, moving towards their all-time high levels. What's your takeaway from the broader markets?
Yes, I was also in the camp that broader market may underperform in the month of January and large cap may catch up, but things are different. Both are performing, especially mid cap and small cap stocks are continuing doing well. So we should respect the screen until and unless market gives signal there will be weakness in the broader market. We should respect the screen and the momentum should be continued, and individual stocks and pockets will continue to do well. So I think investor and trader both should not worry, but stay nimble footing. If there will be sign of any weakness, then we will take action. But for timing, you should not worry.
Good morning, Santosh. I'll draw your attention to something the market is terming as Ayodhya stocks. We have Apollo Sindori, which has opened a multi-level parking facility in Ayodhya. Pravej International luxurious tent resorts along the Brahma Kund in Ayodhya. Genesis International, which is interesting, they have an entire 2D navigational facility along with a 3D map of the entire Ayodhya city available for all the tourists. Indian hotels, Taj Group, they are opening two greenfield hotels under their Vivanta and Ginger brands. IRCTC, of course, has a monopoly on online railway bookings, and Indigo, which is operating daily flights from Delhi to Ayodhya. Now, most of these stocks, Apollo Sinduri has been up last 5 days almost 70%, last 1 month 67%, Praved 67% also in the last 1 month. Genesis International has been up 15% in the last 5 days. Indian hotels, of course, it'll be a very small portion of their entire portfolio, but that has also been up. So has IRCTC last 1 month 23%. Indigo, of course, again a small portion in the entire portfolio. But what do you make of these stocks which are being termed as Ayodhya stocks, and which one is the one that you would most would want to watch in the times to come?
So let's discuss one by one. So if we talk about the Apollo Sinduri Hotel, so yes, it is in a strong bullish momentum and chart structure is also good. But I think around the 27,2,800 mark, it may see some kind of profit booking. So you should not be carried away with this momentum because generally this stock has very low volume for last few days. It is showing strong volume traction. But if volumes are low, if stocks correct, so you will not get easy chance to get exit because there will be 5% lower circuit on the downs, 5 to 10% lower circuit. So better to book profit in this momentum if you are a short-term trader or investor. But if you have a long-term view, you can stay, you can keep your position, and if you get dip around 2,000 level, then that will be a good re-entry opportunity. And second stock was a Pravek. So I believe this stock I'm not comfortable with its fundamentals, so I would suggest better to exit in this current momentum because after this news will out of the way, so I believe we may see some profit booking or correction in this counter. And another was Genesis. So same pattern with the Genesis. I would suggest book profit in Genesis. Timing, I think we may see some more upside towards around 550 kind of level. That will be a good exit level. On the downside, you should keep a stop loss of 450, 460. So in this three counter, you should try to exit at higher level or keep trailing your stop loss. And next three, IRCTC, Indian Hotel, I'm bullish, and Indigo, I'm very bullish on all these three stocks. Hold this whole position in this stock, and I believe momentum is likely to continue. If I talk about the IRCTC level, there's a breakout of multi-month resistance, and I'm expecting the level of 1200 in coming days. So you can hold this position and keep stop loss of 875. Indian Hotel, very strong counter, strong up. So hold position on immediate basis. 440, 430 should act as strong support zone. On the upside, 500, 525 is a immediate target level. And Indigo, another strong counter, continue to hold your position. On the downside, I believe on immediate basis, 20-day moving average around 2950 will act as a strong support level. On the upside, 3330 will be my first target, and 3500 is also expected on the upside.
Okay, Santosh, apart from these, what would you recommend for our investors today, the stocks?
Yes, so I have 5 stocks on my list. So first is heavyweights Reliance. After a many long time, it is giving a breakout of multi-month resistance. So I'm expecting this momentum is likely to continue and it will support the Nifty, where 2770 is my first target. 2590 should be a stop loss. Another heavyweights, ICICI Bank. After a healthy correction, it is bouncing back from 50-day moving averages, and I believe 1040 is the target. 975 should be your stop loss. Tata Power, very strong counter. I am very bullish on green energy theme, and it is showing strong bullish momentum. And where after a consolidation, it is now breaking out flag formation, where we can expect 370 target on immediate basis. 335 should be a stop loss. Another GMR Infra, it is also in a strong bullish momentum, and it is heading towards the positive category. On immediate basis, 96 should be your target. 82 should be a stop loss. And last one is from pharma space, Mankind Pharma. This stock is also in a strong bullish momentum. After some consolidation, it is coming out of a rectangle kind of formation, where 2300 should be your immediate target. 2080 should be your stop loss.
All right, that's a view coming in from Santosh Meena. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you.
But with that, we'll take a short break. On the other side, we preview the earnings of TCS and Infosys, and also Mr. Rohit Srivastav joins us very shortly.
The scale of the attack was something that we were surprised at. David Hadley was a double agent. The Americans did not want him to be fully exposed, so all that he probably shared with the Americans was not shared with us in terms of intelligence. If we had that, I'm sure that we would have been able to deal with the situation far better.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Mitchell Starc became the costliest player in the history of the IPL. A defiant performance by Ten Hag's men, keeping Liverpool quiet to earn a goalless draw.
Sri Lanka don't have any chance. There's another way to win here. I think it's too late in the day.
I wonder how that will happen, given he is among the richest sportspersons on this planet at the moment.
How the game is evolving, and I think that's really important.
Go all guns blazing into this journey now.
Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
I did my best, but now I have to change my life. I hope so. We are getting more good news for India in 2024.
Nobody would have expected this.
Yes, the scale of the attack surprised us.
When you get a series of alerts, 16 intelligence alerts, if Maharashtra government at that time had alerted the Coast Guard and the Navy, this 2611 would not have happened at all.
And one of the details they had planned was to use these dhagas to mislead the investigative agencies.
All this was to be presented as a Hindu terror.
So it was a Pakistan operation. The LET was the front end.
As the attacks were on, it was clear that they were planned and launched from Pakistani territory.
For all of those victims of terror that was exported from Pakistan over the years, including but not limited to 2611.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Stick here on News 9. Now we have the December quarter earnings season, which is finally here, and two IT heavyweights, TCS and Infosys, will come out with their earnings after the market hours. Let's preview the earnings. What are the key expectations, Amit? Let's start with TCS.
Revenue growth is expected to be flat because of weak discretionary demand, and this being a holiday quarter, the furloughs have been long. It is likely to be offset by that $1 billion BSNL deal that TCS acquired earlier on. The management has been cautious on the BFSI vertical, which has the largest market in the US, but they have been cautious on that. So something that we'll have to watch out for. Large deal announcements in TCS during the quarter have been also muted. And this is a key aspect that the company or the investors need to watch out for, as the company had raised its quarterly total contract value from 9 billion and 10 billion to 7 and 9 billion earlier on. They changed it, not raised it, changed it. I beg your pardon. September quarter, TCS won two mega deals. One, as I already mentioned, with BSNL, and the other one was their own sister concern, Jaguar Land Rover. So how that plays out in the coming quarter and in this quarter earnings, we'll have to wait and watch. And lastly, the headcount has been cut by almost 7,000 people, and that is one factor that may play on the earnings this year in TCS.
All right, those are the key expectations from TCS. But moving on, Infosys. Now, unlike TCS, Infosys is likely to report a 1 to 2% quarter-on-quarter decline in revenue in both dollar as well as constant currency terms. Margins could also come under pressure as the company undertook wage hikes which took effect from November 1st, 2023. However, this could be partially offset by the weaker rupee. Now, just like TCS, Infosys is also expected to announce a subdued quarter as far as deal wins are concerned. According to Kotak, Infosys is projected to have a total contract value of somewhere around 2.5 billion for the December quarter, which is a sharp decline from a $7.7 billion worth of deals it secured in the September quarter. As for the revenue growth guidance, looks like Infosys might be trimming its outlook once more. A deja vu from what happened in September, and the word on the street is that they are thinking of tightening up the revenue growth forecast for the fiscal 2024, maybe from 1 to 2.5% down to 1 to 2%. And if that pans out, it will be the third time in a row that they are dialing down their expectations. What will the street focus on now? Investors will keenly focus on the senior management attrition after multiple departures from the senior leadership in the recent months. And another hot topic on the radar will be the scoop around the 1.5 billion MOU, the Memorandum of Understanding that got the boot from a global client. The street is probably buzzing with curiosity about what went down and what led to the termination of a deal that big. And moving on to the stock and how it has been performing, Infosys was in fact the second worst performer on the IT index during the October-December period. It gained about 7.5% in line with TCS, but it underperformed the IT index and other IT IT majors, which gained up about somewhere from 12 to 20%. But with that, let's also bring on board Mr. Rohit Srivastava, founder and market strategist at IndiaCharge.com. Rohit sir, thank you for joining us here on News 9. Now, we were just discussing the December quarter earnings of IT companies that start today, but overall, it looks like this time around it will be more of the same of what we saw in Q1 and Q2. Weak demand, cut in revenue guidance and all. So, anything that you are looking at that particularly we might or the street might be missing out on?
So, well, if we actually look at the initial performance of key sectors in the first 10 days of January, three of the weakest sectors are actually IT on top, which is down over almost 3%, followed by metals and banking. So somewhere these look like the weaker sectors right now. And since we are kicking off the earnings season, unless there's some kind of a positive surprise, it could result in further weakness for the tech sector. So that is sort of how we'll be approaching this. But of course, we're going to start getting the numbers from tonight. That will give us a better perspective of what is happening.
And what's your overall, sense of the market movement? Quite a choppy start to 2024. And in the last 3 or 4 sessions, Nifty has been making lower highs and lower lows, in fact. And it doesn't look like a market that was back in November and December when all we were doing was move higher. But quite a bit of volatility in January, isn't it?
Yes, so the Nifty's actually peaked on the 1st of January and we haven't been able to take out that high. Yesterday's price action did give some hope that maybe we will make one more last attempt to touch 22,000. So I will leave that possibility open, but not with certainty. Having said that, once we are done with this pop over the next couple of days, we should probably see the market roll over again to the downside. So we are broadly looking at a topping formation occurring in Jan of 2024 and further weakness in the months ahead. But it's just a matter of timing it accurately, getting it exactly down to the day. Now there's a lot of rotation, so that is why we keep seeing different sectors do well in between, and the Nifty is holding on. But I do think that this is sort of a distributive process and should be complete soon, and we should see things turn, whether it turns right away or whether it turns after the budget. Now, that is the time question rather than the price question.
Good morning, Rohit. I'll draw your attention to something that we had spoken about a few days ago, that foreign portfolio investments in 2023 have been highest in rupee terms in the history of India at 1.77 lakh crores. But if you look a little closer at the statistics, FPIs threw in almost 28,000 crores in the banking sector and financial services sector in the month of December, after taking out almost 4,000 crores in the previous month, that's November. My question is FPI really a factor that we should look at when we determine the strength of an economy, or is it just one fickle indices that it changes month on month? They're just making a dollar on their money investments.
So they're definitely here to make money. But having said that, from an economic standpoint, fortunately or unfortunately, most of our current account deficit does get financed still by portfolio flows than FDI. And when portfolio flows are negative, then you do see the currency significantly weaken. So when you go back to the last bull market between 2001 and 2008, the USD-INR was actually getting stronger, moving down from a high of 42 all the way down to a 38 or 37 during that bull market. Now, do we see the same thing over here? We have seen the market actually move up, say even all the way back since 2015, 16. And the USD-INR, which had hit 69 back then, is now at 82, 83. In fact, even in the last year, as the market has gone up, the USD-INR has moved higher. What that really reflects is the lack of sufficient flows from FIs into India. So even as you speak of 2023 net for the full year, we've actually seen an outflow of 16,000 crores. Now that is small compared to 2022, where it was almost 2,74,000 crores, just because the last 2 months ended up being positive. Now, the last month, in fact, December was positive more also because it was year-end where a lot of allocation happens. What you really want to watch is whether that pattern which you're talking of, money coming into banking and all really continues in January. Because this is the new year and you want to see whether that was just an aberration. Yeah, it's important from an economic point, from a currency point. Equities have not been impacted because of domestic flows. But does that pattern that we saw in December really continue? I think that's what we need to watch for in January.
Do you expect it to continue with JP Morgan expecting a bigger Fed rate cut than expected?
So this is an if and then question, because if rate cuts do happen and the dollar does weaken, then emerging market flows tend to go up. That is just the history. So if that does become the environment, then the chances of more money coming in are definitely high. But I will not take it as a given right away, because all you have is a Fed saying, okay, we will discuss the idea of cutting interest rates. It is not yet a certainty, and the market is sort of almost priced in several cuts when interest rates have not fallen that much, or even inflation. I have different reports saying, whether inflation will really go back to zero. It's going to just stay sticky at 3 to 4%, which will then make it difficult for rates to go down a lot from here, even as growth is high, government spending is high. So I don't think the answer is there yet in terms of the possibility to cut rates. I think we should really wait for policy action before taking that call.
Okay, Rohit, and finally we are in the month of our budget and the last budget of this government. What are your expectations from this? Will it be an interim budget, or they'll be budgeting for the whole year if they are expecting to come back?
No, they have to follow the standard pattern. I mean, it's going to be a vote on account budget. They can't do much more on the policy front. So it will be almost a continuation of previous policy and previous spending plans that were there last year. So there will be an attempt to do that. Can they really make a huge change in the spending? Let's see. It's not typical. So you can't really call it an interim. I mean, it's always going to be the next, whenever the new government comes in, they're always going to have an interim budget where they will, try to announce new things. So that is just going to be the pattern.
Right, that's the view from Rohit Srivastava. Sir, appreciate your thoughts, appreciate your time. Thank you for joining us here on News 9.
Thank you.
But before we wrap up, let's also look at how the markets are doing. And in fact, we are off the day's high. We have fallen below the 21,700 mark on Nifty. And in fact, we are at the day's low, just about 15-20 points shy of it. Remember, in the last 3 or 4 sessions, Nifty has been facing resistance on the in the upper range of 21,750 mark. We have turned a corner from there, at least so far in the morning session. And let's see how, if and when can Nifty reclaim that 21,700 mark, if it happens today or tomorrow or next week. Sensex has also corrected by about 150 points from the day's high. We were inching towards the 72,000 mark, but as of 10:10 a.m. It sits just above the 71,800 mark, up 0.21% or so. The mid cap and the small cap indices, they are still holding on to their morning gains, but a fair distance away from the day's high. Nifty mid cap 100 has fallen below the 47,400 mark. It currently sits just about 36 points shy of it, up almost up over 0.5%. The small cap index is up 0.4% or so. It's sitting at around 15,440 mark, just about 80-90 points shy of the record high levels. And volatility, now that has moved up once again. India VIX, as we speak, is about 1% higher, and it has reclaimed that 13 sort of levels that has been a worrisome kind of zone for the markets in the past month or so. But relatively speaking, volatility continues to remain low. In the first week of January, remember, we had seen 16 sort of levels, so quite a sharp decline from those levels. And looking as far as the sectors are concerned, most of them are in the green. There is some bit of weakness in the IT pack. Nifty IT, as we speak, is down about 0.1% or so, and this is expected considering that the IT earnings start today, and TCS and Infosys will come out with their results, so there will be some bit of a choppiness over there. Realty sector is also seeing some bit of profit booking take place. It's down about 0.05 to 0.1%. Other sectors are all in the green. Nifty Bank is up about 0.5%. That has been trading in a range of about 1,000 points or so. But yesterday we defended 47,000 after falling about 1,000 points or so. But we are in fact above 47,500 mark. So somewhere between that 47,000 to 48,000 range on Bank Nifty. But that's all we have in this edition of First Stick. Thank you for joining us here. And on the other side, we'll see you with Business Plus.
Ram's Ayodhya rebuilt.